All right, good evening, everyone. It's 6:17 p.m. Eastern Time, 3:17 p.m. Pacific Time. I hope you had a great long weekend. Very tumultuous market on Friday, and we're looking to see some more volatility come in because there's still a lot of gaps left in the market. However, there is one interesting gap that I want to bring your attention to. That's the NASDAQ gap here at 13,230-ish. So you can see how the 21-day moving average and the 8-day moving average they're displacing, right? And the more displaced it gets, the higher the probability of a mean reversion back to the 8 and the 21-day moving average becomes, and that will become a very profitable trade. But at the moment, you can see that the Nasdaq close for the last week of pretty much the last half of August has been trading under the 6-day moving average. And with this, I've drew a Fibonacci extension level here using this wave 1. And from this wave 1 in the NASDAQ, it pulled back to the 23.6 level. Okay, so that's an assumption that that's the end of wave 2, and then we're off to wave 3. And wave 3 has been a pretty choppy wave 3, but lo and behold, it did kind of end up becoming the longest wave. And then wave 4, we were expecting wave 4 to hold support here at the level where wave 1 terminated, but then it pierced right through it, overshot it. So the question is this wave, Elliott wave, invalidated? And this is a very subjective topic, but most would say that it's invalidated. But that doesn't mean that the NASDAQ can bounce and fill that gap, because wave 5 would, if this was a wave that was invalidated, validated, okay, meaning that wave 4 did not enter into wave 1, so it closed like somewhere around here, back above the 6, then wave 5 would be assumed to move at least to 14,190 and possibly even extend even higher. But that would be a pretty ginormous wave 5. Since wave 4 did invalidate and enter into wave 1 space, then it doesn't mean that wave 5 can still bounce and fill that gap. It just can't get above, it could even do a double top, right? Because wave 5 technically would mean that it would move up to this 14,193, which it could still happen, but the probability would be a lot lower since it was invalidated here with the price closing in the wave under wave 1. Okay, so wave 5 has a good chance. We don't even know if wave 4 is terminated yet, right? It still keeps on moving lower, and right now we should be really focusing on the trend. The trend is still moving lower, and it could even retest wave 2 and even make even worse. It could do a double bottom or make even a lower low. If that makes a lower low, then this whole wave count would be reset and a new wave 1 would be anticipated. Okay, and that wave 1 would be that this gap here at 13,230 would be filled on that new count. Okay, if that makes any sense. Meaning that wave 0 would start somewhere over here. Everything would be shifted. Wave 1 could be here. Wave 2 pulls back. Wave 3 would be the next move up, and then wave 4 would pull back and not enter wave 1, and then wave 5 would be making move higher. So this would be that would be another wave 1 through 5 setup if the current trend makes a lower low, takes out this low right here, 11,100. Okay, so futures are open, and it actually closed green on Sunday night session. Monday session at 3 p.m. Eastern time, 6 p.m. Eastern time. It looks like it's opened up flat. Okay, so it does look like the market could stage a little bit of a bounce Tuesday morning. If we take a look at some of the 750R components, that's the retirement account. You can see that Apple formed this red bearish candle, bearish engulfing, which means that there is a chance that a BLT setup to the downside could play out, meaning that Tuesday's trade is going to be pretty choppy. So you can kind of, if we turn on the candlestick pattern here, using bars, you can see that it closed down here at 155. So since the futures opened up positive on Sunday and continuing to trade positive, then there might be a little bit of bounce to retest that six-day moving average, and then close exactly where it closed on Friday, meaning that the day would end up becoming a doji. Okay, so that would be a BLT to the downside, setting up for Wednesday. Amazon has a gap here from earnings, so there's still, and then also a gap here at 137. So how much more would that would be that's actually pretty interesting, because that NASDAQ gap is actually a 9% move, right? From where it is trading right now. And looking at Amazon, there's a 9% move to fill that gap, which is pretty interesting, right? And then the downside, since it closed here, the downside is only 3.61, and if the Nasdaq does make a lower low and takes out the lows from July, then you've got actually a 13% downside risk. Boeing also has gaps everywhere. You can see daily gaps here at 159, and also a daily gap all the way down here at 123. Okay, so it looks like it does look like it's rolling over, but every bounce probably should be shorted until that gap gets filled. Once this gap fills at 122, that's going to be a tremendous opportunity for markets to start forming a long-term bottom and making an attempt to make a 52-week high for the whole entire market after the one of the worst halves of the year of the century. Alibaba has gaps. I think there's some audit or Chinese-related news this week about pending listing or delisting of the Chinese stocks. Disney, tons of gaps. Google, BLT to the downside with gap potential all the way down to a psychological target of 100. Basically, I can't really see any clean setup here. This bearish wolf wave filled on mRNA. Microsoft, bearish engulfing candle, and yes, there's a gap all the way down at 218, which is, it's not going to go down in a straight line. There's a 15% drop, but I think before it makes a 15% drop, I think that gap in the Nasdaq would fill first. So just staying a little cautious here. Netflix here is something I traded last week, and I did pull out a profit here, but it did pull back pretty hard after getting rejected at 21. But the interesting thing here is that it didn't close under the 6. So there's actually it's kind of like you can kind of see the rounding bottom here. And if that rounding bottom plays out with earnings coming in October, Netflix could end up making a double top here, especially if the Nasdaq is going to attempt to fill that gap at 13,200. Nvidia is being hit with some really bad news, and it's pretty close to filling that that gap here at 130. Psychological target is obviously 100. That is probable, since the trend is still intact. But as it continues to sell off and shows, you can see here the 21, the 8, the blue and the orange, as they start to separate, it looks like we're getting into this period where we get a potential ET forming. So I would keep an eye out for Nvidia until and try to see if I can catch an ET when the Nasdaq starts to attempt to fill that 13,300 gap. Roku, it's got a daily wolf wave, but it's not working. Obviously, it's trading under the 6, and something that we should stay away from for now on growth stocks. Shopify, also 27.5 target, gap fill. It's also been in a tumultuous downtrend. Tesla is one that I'm actually very interested in buying puts. If it opens up green, right, you can see that the ET is kind of forming the moving averages are stacked 6, 8, and 21. and any pop in Tesla, I'll be willing to buy some puts on that. So I'm actually going to wait to see. Well, I'll be anxious to see what the pre-market looks like at 4 a.m. when the line's set. If it starts gapping, that's probably something I'll be looking to short with some puts and trying to scalp like a 30 to 40% profit. Okay, so I don't really see anything that looks like it's like a big move is going to take place here. I'm kind of conflicted with how the NASDAQ right now looks, because it does have that massive gap here at 9%, and you can clearly see the 8 and the 21. They're separating to a point where it could end up becoming a ET trade, kind of like this, right? Now, here, when it did an ET, here it sold off pretty hard, and then it mean reverted back to the 6, and then sold off again on that 6. And I think this was Fed induced. And then it quickly moved right through the 6 to the 8 to the 21 in literally 4 days. So I don't think that's going to happen this week. But it could. But if it did, then it would obviously have some problems here at around the 50-day moving average at 12,569.63. So I don't know exactly if what I won't know. I think right now the best is just to stick with the trend. The trend is lower. Anything that gaps up, I think we should just, I'll be looking to buy some puts to scalp for 30 to 40% and then call it a day, right? And then look to see if the market bounces again to scalp again for another 30, 40. But as soon as some sort of news or economic development comes out that immediately reverses the market, then I'll be looking to try to catch this 8 to 21 day moving average move for a gap fill at 13,246. Okay, so my eyes are on Tesla, that gap, which I think is going to fill on Thursday and Friday, and then even Boeing could be a potential, but it's kind of extended, so that could bounce up to the 158 level and then continue to sell off. So we'll see what kind of price action we get on the radar. It looks like the futures are trading higher now, so I think a lot of stocks will be gapping up tomorrow, and that will provide an opportunity for some puts. Okay, but yeah, Netflix is something that I'm not looking to short because it did close above the 6. I was actually going to open up a position 10 seconds into the close, simply because it closed above the 6. What could happen is it opens up a little bit inside 227 and then breaks out through that 21. And if it does, then there's actually a couple of gaps I was trying to get filled last week, up to 239 to 245. Okay, so I'm bearish Tesla on any gap, and I'm bullish on Netflix if it stays above that 6-day moving average. Those are the two tickers I'm looking at right now. I may also look at Boeing, but Boeing's not a tech. Tech usually gives you a better beta, so I'll be watching Netflix and Tesla for Tuesday and Wednesday. All right, thank you very much and have a great day.